Okay, now let's take the discussion forward. Work at home. If that is the new normal, are Indians now looking at trading and perhaps investing directly? We are using the theme Atmanirbhar here, but this is clearly Atmanirbharta to a different level, where Indians and Indian traders and investors are taking their own decisions in order to invest and in order to generate wealth or income by trading. So let's take the discussion forward with Sameer Patil, Chief Business Officer with Bombay Stock Exchange, and giving him company is Mr. Vijay Chandok, Managing Director and CEO with ICICI Securities. Sameer, good morning. Thank you for joining us. Could you quantify for us that what has been the uptick in volumes for BSE, and if you really have to classify or declassify it between retail and non-retail, which is retail and institutional, how the pattern has emerged?
Good morning. This is nobody in the month of January or February thought that this would be a new normal and new norm, that work from home will be a usual practice. And BSE has done a lot of put in a lot of efforts for seamless functioning of the stock market. They have provided services to their member brokers so that their employees can come to the office, and the BSE has provided bus services to their member brokers also in the closer vicinity, so that their employees can come to the offices with proper social distancing, so on and so forth. Definitely, the quarter has been good. Initially, April was a bit. Then there was a lot of volatility then, but then slowly the quarter seemed to be good for BSE. There was growth as far as the turnover on the equity is concerned. And in the month of June, rather, in fact, April was very volatile, as well as very as far as the commodity is concerned as well. You have seen the first time that the crude prices went into the negative zone, isn't it? The WTI crude prices. So BSE was the first exchange, rather, to enable negative pricing in his trading systems. So this was an achievement. So the lockdown or the work from home did not dampen the spirit of the exchange to innovate things, and that was a key enabler. Technology has become a key enabler. In fact, on 1st of June 2020, BSE launched its first of its kinds options on goods. This is the first time ever these contracts have been launched in the world. These are options on goods. Basically, we have in commodities in gold, mini, and silver kg. Basically are options which devolve into the futures, but this contract actually convert into physical deliveries at the end of the month, and in a very short span of time. This is just the second month of trading. We completed 1 month the entire cycle in gold, mini, and silver kg. We clocked highest turnover of 4,005 crores per day last week, and this is an achievement for BSE, and BSE has emerged as the second largest commodity exchange in India. We also completed successfully physical deliveries in the gold mini contracts. Besides, in commodities, we have launched the almonds almonds in shell contracts. This is the first time in the world where such contracts have been launched on an exchange, and we have seen a tremendous response there as well. And yesterday itself, we completed the physical delivery. We delivered 16 tons of almonds in shells in Navi Mumbai. So the lockdown has not hampered the proper functioning, the seamless functioning of.
Right. Okay. Fair point. It's very interesting to see that how exchanges have really put in the digital migration. I mean, if you're talking about almonds, I never thought that such a large category actually existed. But what we're trying to understand from you, perhaps, is largely on the equity side also, that where have you seen a surge in trading volumes? Is it metros? Is it pan India? Is it on the digital platform? What I'm trying to understand from you is that we all know that trading volumes have gone higher, number of demat accounts have opened. But is this largely a urban phenomenon? Is this largely a very Mumbai or a Delhi phenomenon, or this is a phenomenon which pretty much is there across the board now?
Yes. So this, in fact, to answer this question, it's a good question rather. As I said earlier, technology is a key enabler. Our UCCs have increased, investors have increased to 5.16 crores, and this has gone across the length and breadth of the country. because today even on a mobile you can start trading, you can log in and start trading. In fact, the working class and the millennials are the new investor class in this, and we have seen participation across India, whether it's the metros or 2-tier or 3-tier. We have seen logins and participation from them from there as well. And the new contract that we have launched in derivatives, wherein the Sensex 50, which we already have the same contract, the India 50 in the GIFT City exchange that was launched in 2017, which trades over $2.5 billion a day in GIFT City. The same contract we have launched here in India on the BSE, which is a Sensex 50 contract, the weekly contract expiring on Monday. It's a Monday expiring weekly contract, and there also we have seen a very good response. Amid this lockdown and all those things, we are still we have in just couple of expiries, we have clocked 36,000 crores turnover a day, and this contract also is gaining a lot of momentum. So the point that I'm trying to make is we have seen investors across India, not only from the metro cities, but the 2-tier and 3-tier cities. Now, the reason why it is because BSE is also providing their BSE and its subsidiaries are providing its front-end cloud-based trading system like the Bold Plus and the best best services to all the BSE members and their clients, so that they are free of cost. So that the clients and the members of the BSE can come forward and participate on the exchange in a very seamless manner, uninterrupted way, and that too at a free of cost. So that is also enabling the clients, the end users of the members of the BSE to come forward and participate on the exchange.
Sure. Vijay Chandok, if I could get you in on the discussion as well. You know, work from home clearly has given birth to a new crop of investors. We were just looking at the data, and May to June retail sales already are a decade high of about almost 70% right now. Do you expect this momentum to continue going forward as well, or do you think this is only a phenomena of work from home?
Whether indeed this momentum will continue. I think it would be fair to say the reason why this momentum probably came, there are several reasons for it. If you look at the reasons, probably it's a combination of the fact that equities were very attractively sort of poised when this momentum started. In terms of attractiveness, it was really compelling. Then this was one way in which investors could actually enter the markets without necessarily having to have a physical engagement. You know, everything is digital. You can sit at your home. You're actually in a work from home mode, so you have extra time available at your disposal. So you're having access, you're having time, and you also have a situation because of the lockdown, your discretionary spends are sort of curtailed. So you have your financial resources as well. And then let's not forget there is that uncertainty kind of a factor which is also playing out in the investor's mind as to what is going to happen. And whenever there is that uncertainty factor, there is a fear which drives people to start thinking about savings, investing. So a combination of all this coming together, attractive valuation, availability of time, access without needing of a contact, disposable surpluses sitting with you, and that kind of a mental sort of a fear that should I not be using this disposable stuff for savings and investments, actually probably led to all this kind of a thing. So going forward, whether this will continue, I think it would be fair to expect that these are the factors which came.
Gentlemen, just stay with us. I'm going to come right back to you. But I think what's also bringing a lot of excitement in the markets is this new offering, Rosari Biotech. The indicative price itself was indicating a massive premium to its issue price. And there comes the opening bell on Rosari Biotech. It's expected to be a bumper listing, although the issue size was not as large at 495 to 496 odd crore rupees. But the price band of 423, 425 and the indicative price itself was well above the 600 rupee per share mark. 679 is where Rosari has actually listed. It's a solid 59 to 60% premium to its issue price that you're already seeing. This was expected to be a bumper listing given the kind of subscription that you saw within the retail as well as the HNI and QIB category. Marquee investor names forming the anchor book as well. Adia, Goldman Sachs, HDFC Mutual Fund, Malabar, Mire, Sundaram. Nikush, this was expected to be a solid one, and a solid start it has been. 683 now on Rosari.
It's a small issue, Aisha, and again, this is a company which in a sense is in a very unique place. Why? Because the kind of chemical and innovation what they've done, I think is, it's not extraordinary, but these are some of the specialist niche companies, low on debt, high on return on equity, low base, the profit actually can multiply. So some of these companies are very niche, but some of the niche companies in a sense right now are the ones where you would actually see disproportionate amount of gains coming in. See, Aisha, how the bent of the market is changing. The bent of the market is no longer going towards companies which have large assets and which are asset heavy, and markets are likely to reward them when the cyclical recovery starts. No, now markets are saying we want to buy into companies which are either good in chemistry or good in science or good in something which is intellectual. Which has got a human IP to it, or a product IP to it, or perhaps has got a moat around it, which is largely because of product and not because of size and not because of an asset you've built up. And you've actually seen that, some of the smaller niche companies, Alkaya Mines has done very well, Aarti has done very well, SRF has done exceedingly well. So you actually have a very strong play which is now coming from some of the investors who know that you may start expensive. That's how some of the IPOs have started, whether it was DMart or Thyrocare or Dr. Lal. Some of these issues were so expensive that traditional investors shied away from them. But the growth and the business and the moat which they've created because of the relationships and because of the business they are in, I think has been the differentiated factor. And folks who understood the advantage and power of buying good businesses, and rather than playing on value, play them on terminal, which is play them on holding period. That's how you make money. Either you buy cheap or you buy something which is a reasonable price and then you hold it, which is called terminal value, then you actually make money. So these are the kind of companies which are meant for the genuine long-term guys who are ready to play terminal value or time period rather than the price appreciation.
Yeah, absolutely. Okay, back to our discussion, and we were in conversation with Vijay Chandok. We also have with us Sameer Patil from BSE. Vijay, just to the point that you were earlier making, are things normalizing now? What's the recent trend that you're foreseeing for the months of June and July? And does the spike in retail participation still continue, or things are getting back to, the previous normal?
In the month of June, when things are getting close to regular and normal, the acquisition that we are seeing with respect to our customers have actually in the month of June surpassed our average acquisition that we did in the last year. So that's an encouraging sort of outcome that we have seen. Our effort is clearly to smoothen things up. Our effort is clearly to continue to diversify and broad-base more channels of acquiring customers, and to actually increase the pace of acquiring customers. So that's where our attention and effort is going in.
All right, gentlemen, we'll leave it there. Thanks so much for joining us.